Hello, everybody. Welcome to the Saturday live stream. Got a lot of things to go over. Let's just jump right into it. The question that you're probably having today is, why hasn't Bitcoin crashed? Why hasn't the crypto market crashed even more? I mean, because we've got everything going on around us, if you think about it. We've got Trump trying to buy Greenland or invade Greenland or whatever he's trying to do with Greenland. I'm kind of trying to keep up with the stories. We've also got everything that's going on with tariffs. We've got the possibility of World War III right around the corner. And everybody seems to be in love with AI and gold and silver and just buying that like crazy. And with all that liquidity reduction and, of course, the uncertainty of the markets, where are we and why are we even afloat to where we're actually are at right now? And I'm going to ask that today. And there's 4 pillars, I believe, of what's going on here, what's going to lead us into the promised land of higher highs and great big fat bags. And that'll be 4 pieces of the pillar, which is liquidity, economy, regulation, and institutions. These 4 things, once we hit them right, I think we're going to have a massive appreciation. So today I just wanted to focus on just one, which would be the institutions themselves. So first of all, let's rewind. Let's talk about where we're at right now presently and try to see where we're actually going to go. So let's be honest. Retail is dead. They lost interest in us quite a long time ago. The cool kids in 2017 was crypto and digital assets and Bitcoin. And then in 2021, the cool degenerate kids were mostly crypto altcoins. And then Bitcoin was a nice, very stable thing. And then as time has gone on, like we just talked about, there's interest has been waning quite precipitously, we could say. And I can just take a look here. This is from Ben's site, the social metrics. And if we take a look at one of the big social metrics to where, the actual retail is, we want to take a look at YouTube views, subscribers, Twitter followers layer 1s. And then we can see here that back in the day in 2021, ooh, look at those numbers. Nice. We had nothing but massive views and Twitter follows and responses, and people were using their hard-earned time to follow along with what was going on in the crypto space. And of course, 2017, still pretty good. But if we go back here, we haven't seen retail around. I mean, besides us, because we're just the OGs. We haven't seen them around for roughly about a year. Take a look at these numbers over here. So we take a look at subscribers, views, and followers. We can see those numbers go up a little bit or not just by sliding the scale. And you can see that right now we're at 0. A week ago, 0. A week ago before then, 0. 0. Now, other thing will fluctuate. Market cap risk, Bitcoin risk, MDR, VZ, 12 multiple, all that great stuff, right? But we're just taking a look at social, which kind of gives us an indicator of retail. And we can just see that across the board, as time has gone on, we're at 0. Retail hasn't been around since, let's go back to January 2025. That's when we got a little bit of a tick up in the right direction. They haven't been around here for about a year. And we can go back, and it's been pretty stagnant even through 2024. Little bouts here, not too bad. And that, of course, is retail. So interest maxed out, like I said, about a year ago. They moved on to other things like we just talked about. And to give you even a bigger perspective, this is the total social risk, like we just talked about. Again, the good times were 2017, the cool kids. 2021, the degenerate gamblers, and some cool kids. And we're going to see here that after, what is this, November or so, we dropped off the face of the planet in January. Not too bad, actually. The risk back then went from 0.9 to 0.7. Good news, we were always at 0 just about. So if you're worried about like, oh, retail is going to be gone, they're not going to be gone. They already left. So that's retail. The question you have to ask yourself is, who's keeping us afloat? Well, we'll get to that. But a bigger question, I think, would be is like, where are we as far as like, just for moving averages? I like these. They've kind of come to be a little bit of consolence as I take a look at price action and where we're actually going. It seems like this 100-week simple moving average has kind of like been our support line. And this one is the most important one, this 200-week SMA. Why is that important? Because if you look back in 2018 and 2021, it only went to this 200-week moving average twice during that time frame, maybe 3 times. We'll take a look in a bit. But it's very rare for us to hit it. And that price tag is telling us that at 57,000, now it'll fluctuate a little bit, that's where the bottom out price is. And I expect it maybe at some point to happen. Of course, there's other people much smarter than me who are telling you that there's going to be a super banana zone. I'm sorry. What do they call it? A super cycle. That's it. And a banana zone. We'll just call it a super banana zone. And that's going to happen sometime in Q1 or Q2. If that happens, fantastic. Don't pay attention to all this stuff. But it is amazing to me how things just seem to repeat and keep going on. As a reminder, some aspects of the 4-year cycle are still intact. So that is the moving averages. And we can see that, I mean, it's amazing we're actually here. Liquidations just happened. I mean, they happen all the time. We just wiped out 100 million or so. ETFs have been in the toilet from the 16th of January, which would be last Friday going to today. You've had nothing but outflows, 394 million, 479 million, 708 million, 32 and 103. Yeah, that's a nice 1.6 billion, somewhere around there over about a week. And that's Bitcoin. Ethereum, we can see that there's been nothing but outflows as well. 230, 287, 42, and 41. Oh, I'm sorry. There was a massive 4 million inflow on 16th of January. So that's the bad news. And we have to take it with a grain of salt. That's pretty much what it is. So what's the good news? That I brought you here for something. I can't just beat you over the head with bad news. That's not how this channel works. Usually I do good news and then I lead up with the bad. But this one I want to start with the bad and go to the good. Here's the good news. At this point, we should already be 50% down from our all-time high. Our all-time high on October 6th was roughly 126,000. We should be down by 50% roughly if we take a look back. Check this out. So in 2021, we're taking a look here, 67,000. That was our nice high point for the altcoin, excuse me, for Bitcoin. Back on November 8, 2021. Those were good times. That's when everybody was freaking out at 67,000. Now everybody freaks out when you go below 90,000. It's just how it is. So we have this here. And yeah. And if we take a look from November 8th, and in just 2 months, oh, I take that back. Not in 2 months. We should be down by, oh, I take this all back. I was looking at the wrong thing. November. Oh, no. I do take that back. January 2022. In roughly, let me do some quick math here, about 2 months or so, we dropped almost 50%. 67,600, so let's just say 68,000, 35,180, so 48%, somewhere around there. Now, fast forward to today, October 6, 124, and we're only down roughly 30%. Actually, that was November 2025. Now we're back up again. And that's in roughly 3 months past. So there are some good things moving forward. We didn't drop 50%. We tanked in roughly about how long was that? Wow, roughly about 6 weeks. And now if we just go forward, we're only down roughly about, gosh, what, 26% or so? So we're half of where we are before. Also, what's good news? Dollar is weaker. That's what we have the DXY here. Now, this is a funny thing, but every time that the dollar weakens, Bitcoin gets a little bit stronger. Unfortunately, now we're competing with precious metals, which is gold and silver. But historically speaking, usually when the dollar gets weak, Bitcoin gets strong. I still think it could go that way. And then leading to this, who is keeping us afloat in the background? It's institutions. And it's not like they're buying everything up and we're seeing and we're ripping higher highs. What I'm saying is that I think the institutions are sitting behind us, just keeping things afloat, slowly accumulating, not letting things run over hot because they want to pick things up a little bit cheaper and be good for their clients, especially as they tell them to buy and whatnot. Goldman Sachs doubles down on Bitcoin ETFs, boosting holdings to 1.5 billion in Q4 2024. Did you guys know this? Goldman Sachs. I mean, I know they were Bitcoin believers, but not 1.5 billion believers. And let's see, as of December 31st, Goldman Sachs owns 1.2 billion of BlackRock's ETF. Largest spot Bitcoin ETF by asset under management. This represents an 88% increase in the amount of shares Goldman Sachs owned in the prior quarter. Also, I had totally forgotten about this. Bank of America and Merrill Lynch are doing a 1 to 4% allocation model. This is as of the first week of January. Bank of America's Merrill and private bank divisions began officially supporting client allocations of 1 to 4%. And what this means is that there's an automatic trigger. I think this is what's going on in the background. When these banks do what's called a model portfolio or present portfolio, they use automated software to maintain that specific weight. If Bitcoin's price drops significantly, its weight in the portfolio falls below the target. So when it falls below the target, what does that mean? They automatically buy. The system automatically triggers a buy order to bring the allocation back up to the 4% target. This creates a persistence bid or a floor that activates precisely during price tips. And it is interesting how we've kind of maintained that 90K. Now, that doesn't mean tomorrow we can't drop to 86, but I've been doing these memes and posting these on Twitter for, I don't know, like 3 or 4 weeks now, where it's the scene from Groundhog's Day, and you got Bill Murray, and he's got his microphone, and it just says, and we're back at 90K yet again, and it kind of feels like that, and maybe this is the reason. And this source, if you're asking like this, that's true. World Finance Informs, Gemini Reports, December 2025, January 2026. Links in the description. And then also, I found this also interesting. Advisors led institutional Bitcoin growth in Q3 filings. This is on January 9th, 2026. Traditional financial institutions continue building positions. Wells Fargo and Company reported roughly $500 million in exposure. Morgan Stanley had $724 million, and JP Morgan Chase reported $346 million, according to this specific report. So again, I think institutions are kind of keeping us level, not doing too much, not overheating things. And I got to tell you, if it wasn't for the ETF and it wasn't for these institutions, where would you think we'd be right now? That's a question in the comments section. Maybe we'll answer that in Q&A. Now, let me know what you think about that in the comments. And then lastly, and we'll go to the Q&A, is smart money. This was shown to me by Wes over at Smart Money Track, and I do love it. It's good information, and he shared this with us, and I am thankful for it. This is from Nansen Info. And what this is it's a smart money stablecoin indicator. What they do is they track the wallets of quote-unquote big money. Well, they call it smart money. I call it big money. This would be hedge funds and large individuals, perhaps some institutions that are buying up Bitcoin or buying up different assets within the crypto sphere. And what they do is, and this is how I know that we're in the right place at the right time, because these guys don't cash out into dollars. They cash out into, as it says right here, stable coins. So if they bought a bunch of Ethereum, or they bought a bunch of Solana, or they bought a bunch of Tron or BNB, whatever they bought, right? They sell it off into stable coins, and they just wait until they want to accumulate again. So when you see this graph go up, it means they are selling off and they have more stable coins because they sold, which was a pretty good move here in 2021 when they were roughly not too high, and they sold off like crazy into June. And now, isn't this a funny thing? Around about, let's see, August 19, 2025, they were flat. September. Right until, October 6th, they were pretty flat. And then all of a sudden, they started selling off and selling off and selling off some more and some more and some more until roughly December 28th. And then they took those stable coins and they started to buy into positions because things were going lower. Stable coins go lower, they go into whatever assets they're going into. A little bit of a blip here. We'll see where that leads. But again, I think we're in the right place at the right time. Not the ideal if you're waiting for higher highs, but that'll come later. And that's it for today. So look, if you guys like today's video, thumbs up, subscribe, all that great stuff. Now we'll get into Q&A, answer all your questions, and go from there. Let's see. Cookie Monster says, Groundhog Day, most underrated movie of all time. No. I think it's underrated. I think it's a great movie. And that's what I base my thesis on of the memes that I post on X. Very diligent job that I have to do. Mullet is here. New money treated like old money equals manipulation. Yeah. Well, new money is only here for so long until they get rug pulled. Whether that be by the President of the United States coin or by some other meme coin. That's right. Let's see. Francis here. There's retail ever in? They had to do something because retail is the one that really pushes the price up. They don't buy stuff OTC, which is fine with me. I have no problems with that. This is a famous quote, I think Jim Cramer always says this: there's a bull market somewhere. And that is true. If you're smart enough, you know, I have a story for you. This is a guy that I know. You may know him. He's got a YouTube channel. We talk every so often. And he was saying that he had sold his assets, a good chunk of his crypto, Bitcoin included, and he had rotated into more safer prospects. And one of those was silver. And I said, why'd you buy silver? He's like, I always like metals and sounds pretty good. And he goes, but I didn't expect it. I just expected it to be stable, a little bit of a raise here and there, but I didn't expect it to go up that much. And it's kind of strange to, rotate in from an asset that's highly appreciative, which would be Bitcoin and some different alts, and get into silver and watch it go up, whatever it's at. I think it broke above $100 yesterday. He's like, it's just one of those lucky moments. I said, was there any kind of like analysis for that? Did you put any kind of models? He's like, no, not really. Just was a pretty good bet. Silver's pretty stable, goes up a little bit. That's the only reason I did it. And sometimes I kind of look at that and go, that's kind of like a lot of the investing I think people are doing. Like, we try for models and we try to do our best and have our due diligence, but sometimes it just goes to the luck of the draw. Like when I pulled out, and I did a poor job this cycle of pulling as much as I should have out. But I did for some specific things like we talked about, like for real estate, like for land. And right now, that inflow takes a lot of pressure off. So from now on, we could all agree to just follow some of these rules. And the very last rule is take profits. Could we all agree that at some point we should take some profits, just like the Bitcoin OGs that were in the space from 2010 and beyond, as they dumped on us? Just saying. Just saying. I know it's not a popular opinion, but it is what it is. Let's see. Fast Sonic, so I was lucky last year. Forrest gumping my way through the market, somehow selling at the right times. And sometimes it just works out. And that's awesome. Steven says, I don't see it. Just wait till the next narrative, what it will be. That flushes Bitcoin to 50 to 60K. Everything is cyclical. I agree. It's bearish trend market for months. It's not spooky enough yet. I totally agree. And I still believe in the self-fulfilling prophecies that are 4-year cycles. And I know people like, it's dead, and I get the arguments. I understand there's massive amounts of liquidity, business cycle, rates, economy's doing great. I get all that. I understand. But there's a big one, which is there's just a self-fulfilling prophecy, and I still, underneath the tones of everybody who's talking, they still think about that 4-year cycle. Guarantee it. And everybody's still thinking about the fact that, you know what, Q4, that was the all-time high for 2025. And we just went to the next step. And oh yeah, now we're into January, into our big dip year, and we're seeing some depreciation of the asset. I think people are thinking about that. Even though we've got all-time high for liquidity, global M2 money supply, United States M2 money supply, we've got rates going down. Sure, they're not at zero, but guess what? We've hit all-time highs when they weren't at absolute zero. We've got jobs reports and unemployment rate not too awful. Things are moving in the right direction. GDP, I believe, is at 4.3 or 4.4% growth, which is pretty reasonably good. So it's like, what else do you want? What else do you need? The money and flow that came in that was surrounding us, it just didn't find our way into our market. It found its way into AI, and it found its way into gold, and it found its way into silver, and also into tech stocks. More specifically, stuff like Google, NVIDIA, those types of things, because that's the hot new market. And it really just comes down to momentum and speculation. We lost the momentum on October 10th, thanks Binance, and speculation goes out the window. So here we are. And it found its way into Melania. That's a good one. I think most of us have done well this cycle. I think Krantz is right. I think, look, if you're here, if you're on my channel, I think you probably didn't dabble too much into crazy altcoins and got caught up into that nonsense. And if you did, and you were watching my channel, you're probably not here now. So this is actually the good time. You know, the people that have been around for quite some time, I see you all in the chats. And you know that this is just like 2018, just like 2022. Here we are in 2026. And it's the same thing just going over and over again. I got to tell you, yesterday's video, when we were talking about what Jeremy Allaire from Circle talked about, as far as microtransactions and stablecoins and the rails that are built on, I really do think it has legs. And there was one point that I missed. I wish I could have, let's see. Nah, I'm not gonna beat a dead horse. It just went into the API integrations and why I want to go deeper into that, but it doesn't matter. Stablecoins and microtransactions, I think, are going to be the future for AI agents. And I've been using AI a lot more these days. It makes my life a hell of a lot easier. That's for sure. Fat Sonic. It's a good name. Was October 10th ever explained? Really just comes down to this. Binance has API integrations from all the different exchanges, and they use the price discovery or the prices for their different altcoins, cryptos, digital assets, Bitcoin, whatever. And it kind of feeds into that. And when there was a malfunction or an error, what did Tom Lee said? Tom Lee called it some kind of functional error. But it mislabeled some things. A lot of people got liquidated unjustly, I might add. And there was no reversal for that. And then it would just look like a big cascading effect. Now, people explain this better than I can. There's a ton of videos out there for them. But that was essentially the major thing. There was just a glitch and an error on Binance and their API integrations for prices. And because of that, you have massive liquidations. And as I understand it, market makers were liquidated. That's the reason why CZ and the group at Binance said, hey, we're gonna make this right and give money back. They didn't give a lot of money. They gave some funds back. That's true. But they didn't give back what was it? It was reported at 21 billion, but people thought and believe it actually was increased to 80 or 81 billion. And the reason for that is because it would only lock and only record liquidations like every second or every half of a second. And there were so many liquidations happening sub-seconds that they couldn't track it all. So there was a lot of money that was just left on the table and gone. Well, it's not gone. It's in somebody's wallet. I can guarantee you that. Yeah. Back to possibilities. Sounds good. Steven Trevino. You're in mental prison, common sense. Those won't be around next cycle. Who knows? You know, I didn't think Zcash was gonna be around, and the whole prospect of that was kind of a big nothing burger. I like, well, we got Monero. Let's just use that. And then all of a sudden, Zcash just pops off. Why does it? Insert theories here. I don't know. Yeah, Chris says, those who buy during the bear market make more in the long run. We think of it as being on sale. Yeah, and the only thing I'm going to be investing in is heavily Bitcoin, which I buy every single day, and just the best tokens, Binance, Ethereum, Solana, and Tron. And you guys know why I buy those. But I know that even though I have my thesis, your thesis probably outdoes mine, and you're probably going to beat me on whatever altcoin it is that you like. Not all of you, obviously, but some of you will beat me in some altcoin I don't really believe in and don't really understand because you understand it better. And for you, congratulations. That's pretty good. Yeah, it was a glitch. That's it. It's the only channel I watch. Well, thank you. And I dabble into a couple S coins. Hey, Ondo and Aptos, you know, Ondo was supposed to have a nice big not a redeployment, but tokenization of real world assets. I think it's securities, stocks that they just launched, and Aptos. So Ondo might be the big thing. And I believe that Ondo is backed by BlackRock. Correct me in the comments section. I thought that's what it was. I think I have some Ondo, matter of fact. Not that much, and I'll probably dump it. Still DCing, so my average is pretty low. There you go. It's a great, that's what I should be talking about. Common sense. which is this, you know, this your cost basis. If you buy Bitcoin at 100,000, then you don't buy again until it hits 50,000, but your cost basis is 75,000. So, you know, the more that things keep going lower, or if it just even stays at, you know, a low cost and you keep buying it, your cost basis keeps going down. So it's a good thing to remember, especially as we inevitably get into whatever bull market comes. So yeah, when alt season? Shoot, I don't know. I don't know, but I do want to do a video about how every single indicator failed us. Every single one of those damn things. MVRVZ didn't really help out. Well, multiple. Time and wristbands didn't really do too much for us for like selling tops. So I've been talking to a couple of people, and I'm actually going through Ivan on Tech's program. Very good. And I'll tell everybody about that. But I mean, at least with him, and this is why I talk mostly or more so about moving averages, it does make sense. It is a self-fulfilling prophecy, just like 4-year cycles. So I get where he's coming from. Anyhow, once I get through that, I'll let everybody know. Remember when crypto channels used to talk about altcoins? That was good times. Yeah, I still think alts will do fine. Just not all of them. You just can't say, well, BitConnect's going to be awesome because there's a white paper. Those days are gone. Ah, Jim says it. Binance gave money to their customers, not customers of other exchanges. That's good. You know, it's so easy to, and I do this too, is to throw the blame at somebody and not, you know, really get all the information. So to Binance, I apologize, even though they were responsible for all this different hoopla and nonsense. Yeah, just wait till Digibyte takes off. Exactly. Oh, I take that back. I tell you, so I lost 12,000. I got back 200 bucks from Binance. Was that real money, or was that something like they gave to you and said, hey, this is like a gift certificate if you want to take like a trading program through Binance or whatever they were talking about? I had heard, like, I want to say it was MEXC or another exchange, where they would say, hey, you know, sorry that you got liquidated. And I know it was our fault, but we're going to give you the money back. But the money that you're going to get back is only for trading fees. God Lord, worst place everywhere. Jay Steve, anyone here staking USDC? No, but I need to do that on iTRUST. They just started that with getting rewards for your stables. And you know what? I need to do this. We need to do more of this, which is for iTRUST, it's my Roth IRA account. What's good about Roth IRAs here in the States is that they're tax exempt. So if you're doing any kind of trading within your Roth IRA, there's no taxes. So what have been good is when everything was overheating is don't forget about your Roth IRA account. Sell within the account, put those into stable coins, like what they do in that stablecoin indicator we took a look at from Nansen, and just sit there and get some rewards for that. I think that's what we need to start doing. I need to remember. Binance is a scam. I wouldn't say it's a scam. I just think it's got issues. What's the rate of interest on iTrust for stables? I think it's 2%. I think so. TANGEM provides staking. There you go. You know what? This is another question, which is if we're getting yield on that, I wonder if they get taxed on that. Got to ask those guys that. Lone Wolf, I don't know what this is. Who got the 10K SKR airdrop and actually staked it? What's SKR? George Carlin, any word on a Voyager distribution? Nothing. Although Aaron Bennett did a great video yesterday for all the Celsius people, myself included, that the email that you got was actually a legitimate email, and this is going to be either the second or the biggest distribution they're going to lay out. So kudos to them. I mean, no, not kudos to them. They're pieces of trash, and it's a good thing that Alex Mashinsky is in jail. On that note, now I can't leave it there. It's a negative. Oh, Seeker. All right. Ah, for Solana secret phones. Should have gotten one of those. Okay. Well, that's a good note. Anybody who's got, I guess, if you had the Solana secret phone, then you got the secret token. I remember the last Solana phone, they gave away, not Dogecoin, Joint or something, Joint. I forgot the name of the token. And it kind of like buoyed the whole thing. So I'll take that. And that's it. Well, one last thing. As a reminder for Binance, they gave back 200 USDT after a lot of chatting with their support, although they claim they will automatically refund customers who were liquidated on October 10th based on their app screenshot. Bonk. That's the one. All right, everybody. That's it for today. Coming on 30 minutes. Like today's video, thumbs up, subscribe, all that great stuff. Tomorrow will be Jerry V. Hall will be here. We're going to talk about pretty much whatever Jerry wants to talk about. That's it for this one. Thanks much, everybody. I appreciate you, and I'll see you on the next one. Adios.